Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, May 6th, 5:51 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. State of the market changed from mild correction to uptrend today. This is an uptrend without a true O'Neill follow-through day, but we've had 3 straight days of follow through day returns without the follow through day volume. And we've also had great participation by leading stocks over the last 3 sessions, and just absolutely makes sense to upgrade the market state to uptrend. IBD has actually gone away from the labels of uptrend, under pressure, downtrend, and is now going to they now go by a percentage of recommended exposure to the market. So I've seen the situation before where the market has rallied up and made a new high without a true follow-through day. And I know Mike Webster, who is one of the true investing gurus at IBD, discounts volume because of some of the changes that have gone on with the indexes over the last decade. And this is a case to where a true description of what's going on with the market is that it's an uptrend with or without the O'Neill follow-through day, official follow-through day. So check the trend gauge over here. Market leaders upgraded to bullish today. Just great action by leading stocks, just what you want to see. And in a fledgling rally, as we pulled back between 5 and 6%, and now starting back to challenge new highs. Short term upgraded also to uptrend from neutral. Medium term, we use the 21-day exponential moving average for short term, 50-day moving average for medium term. Still showing the red arrow here. We've got 2 closes above the 50-day for the mid-cap index. The other 4 indexes with their first close above there today. If we get a second close, we need confirmation. We get a second close, we'll go to neutral. We end the week above the 50-day. Then we'll go to the green arrow there as well. Not predicting, we're just monitoring the trend, looking for improvements, and reflecting them honestly in our exposure and our description of the market here. Long term, all 5 of the major indexes above their long-term 200-day moving average. And as I've been echoing while we were in this correction, the market never gets into serious trouble if the indexes stay above the 200-day moving average. So although we got stopped out on our individual leaders, we kept that market exposure through the broad index ETFs, S&P 500 in this case, exposure. And it held where it needed to at the 100-day / 20-week moving average, and we bounced at that level. And now after 3 straight days of strong performance after the FOMC meeting last Wednesday, this is where we've landed. So what happened today? Leaders flex, indexes regain 50-day moving average. Pretty much good numbers across the board. Our 21 out of 21 leaders list, and I'll go through them since it's a new list today after our weekend grimming exercise. 20 out of the 21 on the list up today, up an average of 2.08%. And again, this is just evidence that leaders are working. The Big 8 up 1.8%. Big 8 leadership working. RG8 up 1.6%. Our 8 growth ETF composite working. We designed it back in 2021, and it works. I mean, it's just a matter of gathering up all the check boxes. Are they in the positive, the neutral, or the negative column? And when you get enough secondary indicators and it's confirmed by the price action, you are a fool to not take advantage of it. S&P 500 gapped up 0.4%. Strong rally into the close, up 1.03%, equal weight up 0.77. NASDAQ 100 up 1.1, equal weight up 0.7. Dow up less than 0.5%, mid caps up 1.4, Russell 2000 small caps up 1.23, global diversified 60/40 stock and bond up 0.57. Our flagship portfolio, GROTECTION, up approximately 1.01%. Some accounts up, taxable accounts where we hedged and then took the hedges off, up as much as 1.3% today, but the majority up 1.01% approximately. So let's get into the markets. We'll start off with the S&P 500 here. You can see 3 strong days up. Risk increases after the third day up if you start piling in. But what we're looking at now is two comparisons to what we've seen over the last 3 days. The first one goes back to 829, which was a third day up and a reclaim of the 50-day moving average after the first leg down in what would be a 3-leg correction last fall. So the question now is, are we here, which would actually be a negative because we stayed above there for about a week and then we started to falter, break below the 50-day, made another attempt to get back above it, but then we had this inflection point to the downside on September 20th. That kicked off the second leg down, and then we had the third leg down. So the question is, are we here, 829, and this is just a temporary bounce and we're going to roll over, not make new highs, or are we back here where you can see the third day up here was November 1st. We had a fourth day up and a follow-through day on November 2nd. Day 5, we got back above the 50-day moving average, and that kicked off this strong rally. So we're not predicting, we're not guessing. Probably going to be one of these two situations or somewhere in the middle. But those are two scenarios that we're watching. Are we going to go sideways and then roll over and resume below the 50-day moving average, or is this the end of a one-leg down correction, mild correction, held this purple line, that's the 100-day moving average, same as the 20-week moving average on a weekly chart, and then are we going to kick off a move to higher highs? And we will just take it day by day, monitor the leaders, look for low risk entry points, look for any distribution signals from the market. For all we know, we could be down 2% tomorrow, break back below the 50-day, and this was a false rally attempt. And we'll react accordingly, not making any predictions. So there's your S&P 500. We've got a curl back up on the 21-day moving average now. That's technically a good sign. We want that to come back above the 50-day, just like it failed to do back here in late August. See how it hooked up, but could not get back above it. And the weakness continued to the downside. In this case, we continued higher. I'm talking about the beginning of November. We continued higher. We had a cross of the 21 back through the 50-day, and then it ended up being a bullish signal, and it led a 5-month run. And we took advantage of that rally. Our flagship portfolio was named GROTECTION because it has a dual purpose: grow assets during uptrends, protect them during downtrends. The market gives off signals as to where you are. And in our opinion, and I get a lot of argument on Twitter about this from buy and hold people that think you can't time the market. Just because they can't doesn't mean that other people can't. So there's the S&P 500. Here's the NASDAQ 100, very similar setup, back above the 50-day moving average, 2 closes above the 21 hooking up and showing some relative strength over the last 2 weeks. Dow Jones Industrial Average, clearing the 50-day moving average. Mid caps, the S&P 400 mid cap, one of the most important and underappreciated indexes. This is the index where the future leaders begin to grow up into potential big stock leaders if they graduate to the S&P 500. And here's the second close above the 50-day moving average. The slope of the 50-day on this mid-cap index never rolled over. It continued higher. That's an indication of strength. And then the Russell 2000 small caps back above the 50-day moving average. It went from sloping mildly lower to now flat, trying to hook back higher. We'll see if mid caps and small caps in particular can regain their leadership status as they ran very hard. You can see the relative strength line here from November to December, but have been lagging all year since then. Haven't made new highs and on a relative basis, not doing their job, but showing relative strength over the last 2 weeks. All right, those are the five major indexes. We'll move on to the VIX now. VIX was unchanged today, closed at the bottom of the range, which is what you expect to see with a rallying market. Under the 15 level, this is where the market has made its most successful rally attempts, is under that 15 level, going back to last November. The dollar started off weak today, got mildly stronger, didn't stop the rally. It's been, this was the fourth day down, and then before reversing higher into the close after this consolidation over the last couple of weeks. On to the precious metals. Great day today here. Gold up over 1%, regaining the 21-day moving average. Gold and silver stocks up 2.3%, putting some distance between price and the 21-day moving average. And silver gap up back above the 21-day moving average after finding support at the top of this prior base. On to Bitcoin. Gap up today, but failed into the declining 21-day moving average and closed in the bottom third of the range. But this is a pretty nice move up off of the 4-day waterfall lows when we broke the 50-day moving average a week and a half ago. On to bonds. Bonds pretty much in a tight range today, very tight range. Broad bond index up 0.1%. Long bond, the TLT, up 0.39%. Prices up means yields down. Here's the long bond, TYX, down 0.41% and breaking the 21-day moving average, and the 10-year. The 10-year down 0.24%, second close below the 21-day moving average. All right, that's our inter-asset correlation chart fest. On to the tail of the tape. You can pause this. I'll hit the highlights. Initiate rally and above the 21-day. Well, Friday was the first day. Today's the second day. A little bit of news. The supposed Israel-Hamas have agreed to a ceasefire. Oil did not sell off on that headline. Day count, third day up, third day above the 8-day moving average, second day above the 21-day moving average on the S&P, making new highs relative to the recent support levels. 11 out of 11 spider sectors higher. Gold and silver stocks led, semiconductors as well to the downside. Just KWEB, the China ETF index, which had been leading last week, taking a little bit of a break as it got extended. So we kicked up our exposure today, buying 5 names: Micron, CrowdStrike, Pure Storage, Carrier, and VKTX, and adding to our UPRO Index ETF exposure. Pretty big kick up in our exposure from 0.82 to 1.13. That's about a 38% increase in exposure. But again, we're following what the market's telling us. Third straight follow-through day on price, but not volume. That's the bottom line. Leaders flex, indexes back above the 50-day moving average. I remember back in the days when I did not have a process like this. I've developed it over a decade, and I really enjoy putting it into action as the market gives off clues to strength or weakness if you know how to read them. All right, let's the 2121 list. We're going to start off with what we own, everything this flag that we own. There's actually 25 names in here because we added a few today that were not in the 21 over 21 list, but we're going to go through the list. So first, solar, start off with that. Bottom of the range, but making a higher high. Spotify, this is the weakest holding in the portfolio from a progress standpoint since we bought it, finding some resistance at that 300 level. CEG hitting the 200 level, relative strength at a new high, earnings on Thursday. BRT, new highs, relative strength as well, up 4.6%. Gold stocks, we already looked at those. Kava, nice break above to new highs, reversed to the bottom of the range, just maybe a little too far too fast. Nvidia, Third straight day up, second close above the 50-day as it comes into the top of this flat base that it's forming. ALAB, this thing has quite an ATR, so size appropriately, up 1.5%. They've got earnings tomorrow. Micron, nice gap up on an upgrade into this 120 area, a little bit of resistance there. You can see that over here from late March, up 4.73% on the day. We bought this one today. VKTX bought this also, nice bounce off of the stacked moving averages. Pure Storage bought this as well, bounce off of the 21-day moving average. CrowdStrike bought this too. I noticed over the weekend the volume, two straight pocket pivots Thursday and Friday on this. This is a former leading stock going through a normal correction process, broke the 50-day, broke the 100-day, but rallying nicely, strength coming in, relative strength over the last 2 weeks. Maybe a former leader regaining its leadership status. We took a half-size position in this today. Also added Carrier. This is an HVAC company. HVAC companies are playing a critical role in the infrastructure build out for these AI data centers. And don't take my word for it. The Carrier CEO said exactly that in their conference call a little over a week ago. You can see the gap up on earnings follows through strength and a breakout of this flat base, pull back to the top of the flat base and bounce off that 60 level of 3.17% today. So this is the rest of the 2121, and we don't own these, and a lot of these had good days as well. 4.8% for Cameco. Freeport up 1%. Kupang making a higher high. SE a little bit of a pullback today. This was the only stock in the leaders list that was down. Goldman Sachs continues to make higher highs. American Express bounced off the 21-day. Generac bouncing off the 21-day. GE Vernova. This is another alternative energy play critical to the infrastructure of AI data centers, up 1.7% today. Transmedics is just looking great. New addition to the 2121 list, fourth straight day up after its earnings gap. HWM, third straight day up after its earnings gap. Abercrombie and Fitch forming out the right side of a flat base. And Pulte, tight range near the top of this nice flat base. With interest rates coming back, home builders are looking more attractive. And that's your actually 25 over 21 leaders list. And we're going to wrap it with that. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner is Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Wealth of information on our website, revereasset.com. I'm on Twitter @Vandenbord, YouTube. Search for Revere Asset. Remember, folks, it's not how much you make in the market, it's how much of that you can keep. We went from the protection part of GROTECTION with the break of the 50-day moving average a couple of weeks ago. Once it breaks, you never know where it's going to go. We have rules depending on for different exposure to the market, depending on where we are relative to these moving averages. They're trend indicators. We're trend followers at Revere. We also monitor leading stocks to look for alpha as it's offered up by the market. We follow the O'Neill models for great winning stocks of all time. And we've got a nice group of them in our portfolio now, and we'll see how things go as the week progresses. And with that, I'll wrap up the video for Monday, May 6th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.